What's good, ladies and gentlemen? So, I'm going to review my calls from my news site, which you can see here, malamalama.com/WordPress, for about the past 8 months. And before I get started, you can see, actually, I'm definitely going to launch a website called skwealthacademy.com. And that will be launched when my online academy, my 20 course online academy, is finally launched. So I've had a number of obstacles, of course, because of the coronavirus global pandemic, in which I've had flights canceled, I've had business meetings canceled, and so that's been pushing back the timeline by a few weeks here, but hopefully it will be up and running very, very shortly. In the meantime, you can see, I'm scrolling down the archives, I've been writing my news site for a very, very long time, all the way back to, you see, August 2006. Now, before I get started with the last 8 months, I want to go back to April of 2008 and show you how I called the global financial crisis of 2008 before it happened. So here we go. I'm going to click on the archives from April 2008 on my news site. Why is it so slow? Okay, here we go. And on this article, will U.S. markets crash now or crash later? You will see that I wrote this article on April 23rd, 2008. And let me just read just a really tiny portion of it. So I said every time I've written about the imminent disaster, meaning it's coming very soon, that awaits U.S. stock markets and subsequently global markets, the response has been overwhelmingly negative. And every time I write about facts calling for about that crises are going to precipitate, I've always received a lot of negative clapback because it's the whole shoot the messenger syndrome. People don't want to face up to facts. So in fact, I even wrote in this article, it's amazing that people think I have an agenda for wanting markets to crash, oddly connecting my market sentiments to arguments about patriotism or religion. Yes, people did actually call me unpatriotic or un-American for saying U.S. markets were on the brink of crashing. And if you go, just to make it clear, even though it's imminent, I said again, this is why we stand at the brink of disaster today, warning people to get out of U.S. stock markets. And you want to know when the U.S. stock market crashed? It happened just 18 trading days later. So I've been making these types of calls for a very long time. Now let's flash forward to the last 8 months. So let's get started with archives from August of 2019. So here I address some of the psychological aspects when I started speaking of the next crash that was going to happen, which we now know is manifesting as of March 23rd, 2020. I said the greatest threat to wealth preservation is the "it won't happen to me" syndrome. So again, I said people need to stop being complacent. I even spoke about how there's complacency back in 2015 after the debacle in Cyprus, in which a national bank holiday was declared, and certain of the nationwide banks in Cyprus, about 50% of all deposits and bank accounts valued at 100,000 euros or under were stolen to recapitalize the banks in Cyprus. And I said people should never have the "it can't happen to me" syndrome. And I said from a psychological standpoint, it preserves our immediate to short-term feeling of well-being by allowing us to disassociate ourselves from reality and encouraging inaction, even though from a long-term perspective, it is very likely to destroy our self-preservation abilities. So I said back then, even if you don't believe that gold and silver will preserve your wealth as the central bankers' currency wars escalate, and you want to ignore the large rebounds that will eventually happen in gold and silver assets, they will continue to happen whether or not you are aware of them. So basically in this article, I don't want to read too much about it because you can go read it yourself if you like, but I was setting the guidelines for how certain psychological warfare was taking place to make people believe that there was no imminent crash that was going to happen again. And although in that article I didn't necessarily say it was going to happen within weeks or months, but you will see that as the timeline expands, that my warnings get more and more terse. So in that same month, I wrote U.S. bond markets spell trouble ahead. So again, if we look at some of the things I said in this particular article, I said they've been raising red flags for well over 3.5 months now, since May 13th. The 3-month U.S. Treasury bills yield has consistently surpassed the yield on the 30-year U.S. Treasury bond, with the exception of a few days. I said this is an event that should never happen once in a healthy economy. And I go on to say the fact that one is now rewarded with higher yields in the 3-month Treasury bill versus a 30-year U.S. Treasury bond not only points to the fact that U.S. bond markets spell trouble ahead, but that they spell enormous trouble ahead. So I was giving you a warning that this is going to be a doozy of a fall once U.S. stock markets started to fall. Okay, so let's go back. And then one other article I want to point out for this time period, if we go to the third page of the articles I released back in August of 2019, I had an article that said the real reason U.S. central bankers cannot raise interest rates. So in this article, I was addressing two U.S. central bankers' comments earlier in the year that the Fed funds interest rate, or the overnight banking lending rate, was going to rise to over 3%. And I called them out and I said they cannot raise interest rates. I said that was a ridiculous take from central bankers. I don't know if it was a deliberate disinformation campaign or if they were really just that ignorant to believe that the Fed funds interest rate would rise over 3%. But if you go read this article, I gave various reasons telling you why they would not be able to raise interest rates. And I said, even though they were, again, spreading disinformation about the economy being robust, that they were not going to be able to raise interest rates. And I even said here, when the next crash, the upcoming crash, when the next crash occurs, that it will likely be multiple times more devastating than the prior one, just to warn you about the magnitude of the crash that was going to happen. Okay, so let's move on to September, the following month of last year. Now, September, this is actually really interesting before I continue. I had a Patreon-only article for my patrons that might be watching this video. If you want to go check this out and you haven't read it yet, it's called The Single Greatest Yet Undisclosed Possible Bitcoin Security Flaw. And that actually may have explained the Bitcoin crash from about $10,400 to below $4,000 before Bitcoin has now recovered somewhat in March of 2020. So if you go read that article, it just might make you think about, was that reason, this flaw, the reason why Bitcoin prices crashed in February? Now, let's keep going down. Which one is the article I'm looking for? Actually, I think it's on page 2. So let me go to page 2 of my articles for September of 2019. So, here it is. The only one I wanted to point out here is why U.S. gold and silver coin sales are irrelevant. Now, a lot of times you always hear, American silver eagles or American gold eagle coins are not available when paper prices are plunging, because I have spoken about that myself, how there's a decoupling of physical gold and silver prices when bankers slam the paper prices in the derivative futures markets and whatnot. But even though it's important that physical demand is going up and supply is going down, and there's a shortage of supply of coins, you want to read this to understand why it's really not U.S. gold and silver coin supplies, physical supplies, that are the most important when we're speaking about a global supply perspective. So go read that article. So that's all I wanted to say about this month. So let's move on to October. So in October 2019, let's see which article I wanted to discuss here. So I wanted to discuss, let's see, let's keep scrolling. Oh, here, I said the same warnings that preceded the 2008 global financial crisis have been appearing again. So again, these are multiple months, I'm telling you, red flags keep popping up time and time again that mimic the exact same red flags that preceded the 2008 global financial crisis. So right now, I've given several months of warnings of reasons, and really, really strong reasons of why one should consider exiting your entire positions in the U.S. stock market. So you can go ahead and read that article. And I also spoke about the overnight repurchase agreements that had sprung up around that time. That served as one of the red flags. So now let's move on to December of 2019, last year. And in this article, which I said, don't be distracted from reality by the overinflated U.S. stock market. This is when I spoke about why the U.S. stock market was so overinflated. And I spoke about the further signs like the overnight repurchase agreement, the trillions of dollars that were being fed to U.S. banks at that time as massive warning signs that an imminent stock market crash was going to happen. So finally this year, we move into January, and I said gold and silver prices are likely to rise on global coronavirus fears, which we know happened. And even though they have recently retraced quite a bit, not so much in gold, only going from 1700, 1500, but these are just paper prices because the real retracement happened in silver paper prices, but for silver physical prices, which I will basically explain later in this video, they haven't really retraced all that much at all. So when we're talking about physical prices, yes, this still very much has happened. And then if we go on to this, look at this. I said, will coronavirus be the black swan that pops the bubble of everything in 2020? And I made a point to say that the coronavirus is not the reason why the U.S. stock market was so overinflated, and that the bubble of everything would have popped regardless if a global pandemic happened or not. But I said it could be the trigger, and that's all it was the trigger. It was not the reason that the U.S. stock market and other global stock markets started crashing. And look, I wrote this on January 28th, will be the trigger. You want to see when the U.S. stock market started crashing? They started crashing right about here. Here's the S&P 500, right? The big first drop happened on this day, and this is February 24th. I wrote that article on January 28th. So I gave you a full month, again, to get out of the market. So now when we move on to February of 2019, okay, let's go back. February of 2020, this year. Okay. Now I told you my warnings picked up pace as we got closer and closer to the tragic event of the stock markets crashing all over the world. And even when they did start, I said, as far as paper gold and silver prices, I was one of the first people in the entire world to speak about the quiet act of raising margins here in February of being responsible for declining paper gold and silver prices. And even here, I said, look, are Westerners underestimating the threat of coronavirus? And this was happening at a time in the United States when there was just literally a handful. I believe it was less than 5 infections reported in the United States. And I said, you better take this threat seriously because it is a very, very serious threat. And again, I wrote an article that central bankers were going to scapegoat coronavirus when the global economic crisis happens. And you see that they've done exactly that. Although I told you in previous articles, the coronavirus was not the reason there was a massive bubble of everything. That was due to foolish and loose central banker monetary policy for more than a decade, since 2008. And look, I warned you back then that we've seen a failure this month in March of the central bankers cutting interest rates, taking emergency measures, because the U.S. Central Bank had an emergency interest rate cut of 50 basis points off the Fed funds interest rate on March 3rd, prior to their scheduled Federal Open Market Committee meeting on March 18th later that month. And then before the March 18th meeting, they cut it all the way back to zero. And look what I wrote. I said central bankers' belief that cutting interest rates is the panacea will fail. I said sparking higher gold and silver prices. And I wrote this when? February 17th. And I said they're going to cut it back to zero, but it's still going to fail. And I talked about other central banks in Asia that will do the same thing, and they have done the same thing. So what else did I want to speak of here? There's actually even articles I'm not covering like this. You may want to go back and read if you have not read them. Let's see if there's anything interesting on the second page of articles for that month. Oh, okay, here's one. The underreported economic consequences of the Wuhan coronavirus. Because recall again, the U.S. stock markets didn't start plunging till February 24th. And when did I write this? February 6th. So again, a couple weeks before the U.S. stock market started plunging. Look at what I said was going to. I even named specific companies. I said that will likely be material hit by negative economic consequences of the coronavirus. I said Apple, Tesla. Let's go look at some of the charts for Starbucks. Let's start with Starbucks, and now I'll go to Apple, Tesla. You look at February 6th, it's trading. Where was it trading? Above somewhere around $86, $87, and it went all the way to $50 a share. So I gave you plenty of time to get out. Let's look at Apple. I said February 6th, Apple's going to tank because of the coronavirus. Again, Apple was trading, here's February 10th, around here, February 6th. It's trading about $320 a share, and it's gone to $229 a share. Again, massive plunge. What else did I say? I said Tesla was going to tank because of the coronavirus. Again, February 6th, we go to February 10th, is right here. February 6th is somewhere around here. So it was still about $750 to $800 a share, and it went as low as $350. So what is that? 500 over 850. That's a massive loss. $500 over 850 a share. And let's see what other. I said also hotel chains like Hyatt, Intercontinental, and Shangri-La hotels were going to go down. Okay, look at Intercontinental. Again, February 6th. It was right about here, so it's trading around $62 a share or something. It went all the way down to $25 a share. Hyatt Hotels, I said, was going to suffer because of the coronavirus. That was trading somewhere around $90. It went down to below $25 a share. Massive plunge. And I said the Shangri-La, okay, I'm not going to show you that. In essence, there are all these companies I said that I also said Remy Martin, whose parent company is Remy Cointreau, traded on the Parisian Stock Exchange, Paris Stock Exchange, Pernod Ricard, is that how you pronounce that? Pernod Ricard, basically liquor makers. They didn't plunge as much as the stocks I showed you, but they plunged a great deal. So I gave plenty of opportunity for people that were holding any of those stocks to exit. Okay, so finally, let's go on to March. This month, what do we have here? Okay, blah, 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 blah. Okay, again, I review some of those 14 stocks I told you were going to crash. The only one that didn't out of those 14, and they all crashed, you saw some by like 50, 60, 70%. Most of them by 30% or more. This is only one that didn't. And ironically, it's a Chinese airlines, Hainan Airlines. So around February 6th, it was, let's see, February 6th, it was about here, and it's gone up to 162, so that's about 10%. But you can see it was once here, one way up, and then it's come down, so it's on its way down. So I think eventually, at worst, this will probably go to break even, but probably actually become profitable as well in the future. So those were the 14 stocks. You can go read about that if you want. I was telling you central bankers now between a rock and a hard place. You can go read that. I said U.S. central bankers will quickly cut the Fed funds interest rate now. Remember the first emergency cut came on March 3rd when I put this out, March 2nd. And March 2nd, since I'm in Asia, we're one day ahead. It's actually March 1st. So I call this 48 hours before it happened. And that was when they first cut it, and they didn't cut it to zero. But then they cut it to zero later in March. Okay, so I said here, I believe in this article, I know in one of these articles, I said they were going to cut the interest rates back to zero. Blah, blah, blah. Here it is. It's it's now very likely that another one of my past predictions will now come true later this year, that U.S. central bankers will quickly cut the Fed funds interest rate back to 0% to 0.25%. And that is exactly what happened in the weeks that followed. So the last thing I want to talk about are the YouTube videos. A lot of you don't know, I have a YouTube channel called SK Wealth Academy Podcast. So please go to it here. Please do subscribe. When you subscribe, you'll see a notification bell. You hit the subscribe button. You have to click the notification bell to be informed of when I upload new videos. Otherwise, you will not receive it. And please also click the like button. This particular video has 26 likes and 2 dislikes. And the funny thing is that the dislikes are probably what I said right here at around the 2-minute and 50-second mark.
So now I am really certain that you're going to see the same type of viral outbreak in cities in America, perhaps New York, perhaps Seattle.
Okay, so I said that I'm really certain you're going to see outbreaks of the coronavirus in America, and I wrote this on March 12th. Again, there were just a handful of infections being reported in America at that time, and that situation has really expedited. So it's now, as of March 23rd, I believe there's more than 15,000 infections reported in New York, and Seattle is the second other hub of the most reported infections. So I was completely on point with the number of infections exploding both in Seattle and New York. And the 2 downvotes there were probably by people that thought I was overhyping what was going to happen. So if we go again to the other videos, one other video that I would like to point out to go watch is this one. Most gold and silver experts on television are not precious metal experts. And I explain why they are not precious metal experts. So you can go watch this video if you like to learn more about the decoupling, the reasons why the physical gold and silver prices have decoupled from the paper gold and silver prices. And that just about wraps up my review of the last 8 months. So again, don't forget to bookmark my site here at malamalama.com/WordPress. And don't forget to subscribe to my YouTube channel by going to the subscribe button. Once you hit subscribe, you'll see notification bell. Click the notification bell as well, and that will subscribe you. And also, when you go to my website here, if you want to subscribe to my weekly newsletter, you may as well. So you'll see that if you're a new visitor, then you should see a pop-up box come up. I guess because I clicked on this, I'm not a new visitor. But when you go and you refresh it, if I go and actually get rid of all the cookies on my website, you'll see a pop-up box to sign up for my free newsletter if you like that as well. That will provide more analysis. So that about wraps up this video. Hope you enjoyed it. And as always, remain intensely curious. Until next time, have a blessed day or blessed evening. and so long.